Folks, this is Roger Scott, and this is second of our three-part video series on if I started over. And again, I'm not starting over. I've been doing this for 25 years. I'm pretty far away from starting over. But I get a bunch of emails from beginners who want to know, hey, what's the most important thing should I do? Where's the needle mover here, all right? How do I get the most success with the least amount of work? What's the 80-20? So this is what this is about. This is exactly the type of stuff you need to know. If I had to go back in time, if I had a time machine, I would love to have this information. I really would. So if I started over, our first part was psychology. We talked about trading psychology. I explained to you that what I was talking about was not trading psychology in terms of where to cut your losses and where to take your winners. That's a little bit ahead. We're going all the way to first principles here, okay? And what I'm talking about psychologically is false belief. Most traders have a false belief system. They think that 85% of your trades will be winners. They think that it's easy to cut losers and let those winners ride. They think it's easy to make 10,000% return in 3 months. And those false beliefs lead you to disappointment and turn you off trading. And here's something interesting. The longer you persevere, the longer you try, the higher your odds of succeeding. Keep that in mind. So, without further ado, let's talk about trend identifiers. And folks, if you enjoy these videos, please subscribe to our YouTube channel below. I'd really love for you to get my videos daily because these are coming out, I believe, 4 or 5 days a week. So, trend identifier. So when I started trading, again, one of the biggest false beliefs that I had was I was on this search for the perfect indicator. I wanted that perfect indicator. If I just had that one indicator, I would be accurate all the time and I wouldn't have those nasty losers. And if I just had the perfect indicator, I would outwin my peers and I'd be able to retire. No, here's the thing. There is no perfect indicator. It doesn't exist. Because here's the thing, the indicator that works really well for a trending market will completely fail in a sideways market. Or if you're looking for a pullback, a momentum indicator is not going to help you. And if you're looking for momentum, a pullback will not help you. And if you're looking for a pullback, momentum will not help you. So it works both ways. You got to find the right indicator for the job. But let me back up just a little bit. You need a foundational approach. Before you find indicators, before you try to fine-tune your trading model, what you need to do is focus on the foundation. And what I found to work as the best trend identifier is something I call relative strength. It's called relative strength. Let me write it down. And I know it's not as sexy as a stochastic oscillator or as an RSI, and it doesn't have a moving average exponential word in it or a Bollinger Band. You know why? Because this is based on raw price. Raw price. You see, here's the thing. Whenever you use an indicator is based on a math formula. That means price data goes into the math formula and it comes out with an equation. For that to happen, time takes place. And what you have is a lag of time. So what you're seeing is something that already happened. And that's equal to driving while looking at the rear view mirror. You're going to get into a crash fast, all right? You're going to get into an accident if you follow indicators. For your basic trend analysis, what you want to do, all right, what you want to focus on is performance. Take a look at 2 stocks or 3 stocks or 10 stocks. Take a look at all of the stocks that you're looking at or commodities or Forex. Doesn't matter what you trade. And look and see which one is performing out of all of them over a 1-month period of time, 3-month period of time, 6 months period of time, and average that data. And that'll tell you what's moving right now, all right? And that's the best way to identify price. There's no better way to do it, all right? And I recommend you guys do the same. So you would take, let's say you have 2 stocks, ABC and ZYX. And ABC stock went up 10%, and ZYX stock went up 20%. That means ZYX is stronger. That's the one you trade. You do these type of analysis over a 1 month time period, 3 month, and 6 month, and you see which stock is the strongest. And the strongest stock right now will more than likely continue leading. If you look at the strongest horse in a race, it'll most likely continue winning. It has the highest odds. You're looking at 2 or 3 or 4 or 5 different competitors in real time. You're not looking at an indicator after the fact. All right? This is really big. It's called relative strength analysis. I know it sounds really simple. It's not state of the art. You don't have to use an advanced computer for it. This stuff works, folks. It works amazingly well. And again, if you enjoyed this video, please subscribe to our channel below. This is Roger Scott, and I have one more video in this series, and it's going to talk about positions, combining positions together. Trade clusters. We're going to get into it in the next video. Talk to you guys soon.